Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording this on Saturday, October 5th, after AMC closed on the 4th at a price of $4.40, being down about 0.68% on the day and then going up a penny in the after hours. And so I wanted to follow up on the chart because that's what I do every week. And yeah, I think some things are unfortunately not looking so great for it, but those things could also be kind of a fake out to the downside and that we could be seeing some moves higher. But really, in this video, I'm going to go over some levels that stand out to me, but then I am going to get into some things, kind of exploring more the psychology of the chart, because I think, it's interesting and I think that can be pretty valuable as far as buying dips and, waiting for breakouts, things like that. But so here, looking at the chart, unfortunately, as you might be able to see it, we did hit a lower low in this time frame. The low that was hit on June 25th was $4.33. And we did go lower than that. On Thursday, October 3rd, we hit a low of $4.29. So that's not looking so great there. But one good thing about it is we did not get a close lower than 433. We opened below opening on Thursday at 430, dipping down, 1 penny. And then, we closed at $4.43, being up on that day on Thursday at 1.37%. So not really that bad. And it does look like, we did put in a bullish engulfing candle relative to Wednesday's open and close. So, maybe that's good. But yeah, I just wanted to go over really a close that we hit a couple weeks ago that I think is actually not so great because it was a lower close. So looking here on September 25th, we closed at a price of $4.38. And so that is lower than the low that we saw on August 5th when the markets gapped down over the weekend, and then we got a pretty nice bounce. As you can see, a pretty big green candle here, but that was opening much, much lower. And so the low on that day was $4.41, which was also the open. And so we got a close lower than that on the 25th. And I don't think that looks really that good, to be honest. And we then hit a lower low while we did not close below this low from the 25th of September. Like I said, that low was $4.36. Maybe I didn't mention the low, but let's see. What was the low on October 2nd? The low is $4.36.1. So maybe there's a little bit of hope there that we didn't close lower than that. But overall, I think that it's just not looking that strong. We did break below this uptrend that had acted as, let's see here, prior support, going back to the low of $4.10 hit on May 31st. The other pivot point being that low from August 5th. So we did break below that. Now that does seem to be notable resistance as the high from September 30th did intersect with that trend line. I did have other trend lines drawn up here. They are grayed out. Maybe you can see them a little bit, but we're much lower than them. So those are now resistance. And, this one here. Also, we do have these Fibonacci levels that I had previously drawn up. We are trading below them. So it does seem like there is a lot of resistance to the upside. And we did hit a lower low than this low of $4.33. So I feel like $4.10 is kind of that next level that we might be retesting. But, if in case this is the bottom at 429, we are bouncing from there. The level that I think we need to be closing above is going to be the high that was hit on the 30th when we tested that uptrend. And so that high is at a price of $4.69. Easy to remember, given that it's $4.69. But of course, all of these levels that I'm talking about are below $5 a share. And, we had been trading above $5 for quite some time. I don't think it's looking so great that we are in the lower half of the $4 to $6 range. But, now that I have this level to the upside that we need to be closing above and 429, we don't want to be seeing a close below that. But if we do get a close below 433, I also think that is no good. So do keep that in mind. And so now I am just going to get into some things I was thinking about over the past week, just kind of talking about some of the psychology of the stock, whether it's AMC specifically or just the stock market in general. And so the thing that I want to talk about is that when we were hitting the highs on September 30th or right around there, I saw at least one account posting on X, glad I bought the dip, bragging about buying the dip. And so that dip was from this low from September 25th at $4.36. And so, I think it's great. I think it's great to be buying the dips. It's definitely better than buying the tops. And so from that, let's say this person had no shares before they loaded the boat at the low at 436, and then, whether they sold at the very top or not, that is an upside move of 7.57%. So, over the course of a few trading days, that's a pretty nice move. So, that is pretty good. But then, following that, we hit a lower low. And also to note that that close on the 25th at 436 was lower than the low from the 5th at 441. So I just think that, it's kind of like a bad signal that we're getting a lower close in there, and then to be bragging about buying the dip right before we get this pretty massive reversal candle. I don't think that's so good. While I think it's better to be buying the dip, you could be arguing that, bought the dip here at 464. That's great. That was followed by a 10% move. So that's pretty nice. But then following that, from that level, it's come down 7.5%. So not really that great. And, so what's the game plan here? What's the game plan with AMC? Is it for just swings over the course of a few days to take 10% profit? Or is this for a squeeze? Is this for a longer term play to be holding for the long term? And so my impression is that it's the latter. It's for the longer term play. It's for a big move to the upside. And so these little moves, they're nothing. In all honesty, they're nothing as far as what retail wants. Retail wants the price to be going back up to here, back up to the double digits, potentially up to the triple digits. That is what we are looking for. And so to be bragging about buying the dip here, which was based on a close below a key level, that is a technical breakdown, and now we're starting to see it. I just think that's a bad thing. I think that's a bad practice. This dip that we saw here on Thursday, that's a better dip buy because there wasn't a close breaking below a level. So, I think it's good to, be thinking about these things, be thinking about the opens, the closes. The candle on the 3rd was a much stronger candle to be buying at. So do consider that. And also, let's say this stock is manipulated. Let's say all stocks are manipulated. If I was a hedge fund and I was, let's say, manipulating the stock, and I knew that there was a community of retail investors known as apes who always buy the dips, what I would do, let's say I'm a hedge fund, I'm overall short AMC, let's just say hypothetically, I would, if I was that hedge fund, I'd be wanting the price to go down. And then I get this signal that says price is going to continue to go down. I would say, hey, that did hit a lower low. It went lower than 441. Retail's probably going to buy up that dip, and they're probably going to brag about it. Let's pump it. Let's pump it up about 7%, and then we can take our profits and dump it. And and then the price can resume down. And so I feel like there's a lot more money to be made for hedge funds, market makers, the bad guys, whatever you want to call them. I think there's a lot more money to be made by swinging it based on retail sentiment of buying dips. And that's exactly what we see here. When we see dips, we see small rallies, and then we see new lows. And so I feel like, I've talked about in this prior videos that we're going to be seeing price potentially coming down towards, not to, but towards $2.91. And I feel like from a psychological standpoint, there might be a bunch of people waiting for that gap to be filled at 291. If let's say we get to $3 or 325, but not 291, there will be a lot of people left waiting for that gap to be filled. And if we get down to let's say 325, and then it starts to reverse, and then we fill this gap up here at 685, then those who are patiently waiting for 291 might jump in being late, FOMOing in up here, and then really drive the price higher. So I feel like from a psychological standpoint, price is coming down. We're breaking below technical levels, and we're getting pumps that are, I guess, driven by retail buying dips that aren't significant. And, I just think that's not a smart move. Buying that dip right there with that lower close, that's not a smart move, or a close lower than the low, I should say. And so I think that we need to be better. We need to be smarter. And so if we want to have 5-10% rallies, I think that we should keep buying the dips, whenever we want, just accumulating more shares, whatever. I think that's fine. But I think that if we want to be smart, we need to wait for technical levels, whether that's a technical break to the upside, like getting a close above 469. That's a level that I think is important. If we get a close above that, I think it could be breaking out from this downtrend. But really, we could draw another trend line here. It looks like, we are below this level here. So that's, more resistance. We're in this channel that's going down, and we haven't, in my view, really formed a bottom yet. Another level maybe that we want to be seeing closes above was the high from Thursday when we potentially did form a bottom. The high on Thursday was $4.50. Did we get a close above that on Friday? No, we didn't. We're 10 cents below. We did go higher though by 1 penny. So maybe that's like, ooh, retail wants to jump on board because we're going higher than we were on Thursday. But then there's a sell-off, and we close at 440. So, I think that we need to be really smarter about that. Otherwise, there is just going to be this continuation of small pumps as it bleeds. And, for me personally, I have tons of shares. I don't need to get any more, in all honesty. I don't feel the need to, although, I do want to get my average down. But, I want to do that at a level where I think it may be the bottom. And so I think that's going to be coming down towards 291. And so, while I want to get more shares and my average is below current price at 440, I could be getting my average down every single day. But, if I wait, if I'm patient for a level like 350, because like I said, I don't think 291 is going to be hit. Maybe $3 isn't hit. Maybe 325 isn't hit. So just rounding, just being approximate. And also with that corresponding with the open from May 13th, that was at a price of 352. So right around 350. And so I feel like that seems like a pretty good level to dip buy at, and for that to be potentially a legitimate dip. And so rather than buying the dips every single day, I think that we need to recognize that this is a longer term play and that we want to get the best possible price. And so I could see price coming down over the course of the next month or so to 350. And so that personally is what I am waiting for. But if we do get a close above 469, I think it negates that thesis and that this could be launching higher. And then one last thing I did want to go over, I'm actually going to switch to the log scale to show this. But, this is a long-term play, as we've talked about. We're all familiar with it. And so just taking a big step back, I actually think I need to switch over to the weekly for this. And now just zoom back in a little bit. So this trend line is based on the highs from June 4th of 2021, as well as the high from April 1st of 2022. That's how I draw that trend line on the logarithmic scale. And so we can see that has been some pretty notable resistance. Maybe we get back up to that level. If we got up there tomorrow, that would be at a price of, like $17, so it's not super crazy considering that we were just recently around $11 a share. And so, but let's say hypothetically, just to prepare ourselves, let's say we just trade in this range. Maybe it's 4 to 6 or maybe it's 3 to 7, whatever it is. Let's say we just trade in that range until we get to that downtrending level and then we get a breakout. I think that breakout could be massive, but I think it will take some time before we get to that downtrend. If we went up to it now, that would be acting as resistance. But if we trade sideways and get to that, then we could be breaking out, and that could be the floor rather than the ceiling. But if we do wait until we get to that trend line, that would be getting to this intersection of that trend line with this trend line that I have drawn here with the gap to the upside that we have at 685. That's around November 6th of 2025. So, buying the dip when it goes down to $4.36 might be exciting. If we're going to be trading in this range for a year, not saying that I think that's going to happen, but just to prepare for that, we've already been holding for years. What's another year? I think it's good to have that in mind, that we could be trading in this range for another year. And if that's the case, why not wait for the real dips like at 350, not the ones where we break technical levels like at 436. And, if we do break out from this, then I think we could get back to these euphoria levels potentially, which would be like $400 a share. So, if that's what we're waiting for, we should not be buying these micro dips that we're seeing. Just switching this back over to linear, because we could have waited. This was not a dip anymore. The real dip was 429. So, I just wanted to put this video out to talk about that dip was a break below, a level. And we've been breaking below levels. We haven't been breaking above levels. And so I think that this is going to continue bleeding. And I think that 410 is on the horizon. And, I'm going to wait to be pretty aggressive at 350 because I think that could be a bottom. I think that could trigger a big up move. Not 7%, not 10%, maybe 100%. I actually think quite likely 100% going from 350 to 7 for AMC. That's nothing crazy. And so from 350 to 7 would be filling that gap. And so that's what I'm looking forward to. I am looking forward to being patient here and not falling for the traps that, the nefarious actors, that the bad actors are setting for us and that we just keep falling for, that we're proud that we buy the dips. Were we proud when we bought the dip over here, 441? Well, actually, that's 786. Now that I mention it, we're right around there. So yeah, that was a dip. That was a technical level, 441 being at the 786. So maybe there's some hope there. But we did close on Friday, the first week of October, below that level. And, we did right here as well before we got a 35% pump. But is that what we're here for? No, I think that we're here for much bigger moves. Looking at this on the weekly time frame, I think this is what we're waiting for. And right now we're just bleeding. We're falling for traps. So, if you're going to buy the dips, I think that's better than buying the rips. But at least wait for them at technical levels. And I think that we are probably going to be heading below $4 a share into the threes. And so I think that, it would be better for retail to take advantage of that than 436 because that's nothing. with where we're at now. I think 350 is much better. So I don't know. I'm a little disheartened by that. I think that there's also more infighting and stuff. I mentioned that in last week's video, but yeah, I think at 350 is going to be on the table, and maybe I'm wrong about that. Maybe 369. Have fun with it. But I think that we need to see something get triggered before it to launch, and we're not just seeing that. We're just being played with like a cat plays with, a bird. And I don't want to be that. I want to be the cat. I want to pounce. So yeah, hopefully that was helpful for you guys. But those are just my thoughts. If you found it helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, you guys. Take care and enjoy your weekend. See ya.